Okay, good morning. Hello, my name is Noé. I'm a NAV senior consultant. I'm working here in Optimus. Very proud to present the topic for this webinar. First of all, I would like to talk about I would like to talk a little about myself. I'm a Microsoft Dynamics NAV consultant. I have a master in finances. Also, I have some years working in the NAV environment, and with some implementations and, of course, experience for closing. The NAV fiscal year, which is the topic we are going to review today. So, overall, the year-end process within NAV 2017, which is a very cool process, very easy. And today we're going to review the general and the most important tasks to complete this, with some explanations and some examples within NAV for you to overall have the idea of what the a year end is about. So, well, let's just begin in our presentation for today. First of all, we have, as a general review, the finance closing process routines. We need to close what we call the ledgers and subledgers. We have some specific modules, some different areas for we to actually complete the process. And we need to close, we need to give a review for accounts receivables, a review for accounts payable. Also, we need to check our inventory for many closing purposes and reevaluation of the inventory. Another very important topic here is the cash management and bank reconciliation, and so on. So, well, the overall idea is that at the end of this presentation, we could understand how to proceed whenever we need to close and reopen and open a new period within NAV with another fiscal year, so we can move our balances and start working in the new year. In this case, for 2018, for our example, right? So, well, the whole idea, of course, first is that we need to give you a checklist overall. So, is it that time of the year, again, as we are in the middle of the fourth quarter for many companies. And here is our short checklist for you to quickly and efficiently close your Microsoft Dynamics NAV applications. And feel free to send us later your questions. I'm going to give you our contacts. So if you have further questions on this, just please, you can write us, right? Then the year-end checklist. This is very important topic. Whenever you try to get into this activity, there are plenty of processes. So, well, as an overview and step by step, we need to explain all of this. First of all, the first activity is to post all open journals. We understand that financially speaking, and the operation, of course, we have some payments, deposits, cash receipts, and payroll activities, purchase orders, sales orders, etc. This is what we could consider they are open transactions. We need to start thinking about closing all of them. This is the first activity. Also, post-recurring entries for the year to be closed, which is we need to review our purchase and sales orders because some of them have not yet been invoiced. So we need to start reviewing what in our back order, what to start working with to process as much as orders as we can and payments, and otherwise then we need to start posting recurring entries, so they will be reversing the following year in the beginning of January. So, well, this is a part of the activities for all the open transactions, and then comes the inventory reconciliation. As of end of a fiscal year, we must perform the inventory revaluation. Depending on your industry, or to correct errors, maybe you may be able to revalue inventory as part of the year-end process. And now is the time exactly. For that, we need to review our costs. We need to start also reviewing by what we call the posting groups, or certain groups of items. So we can just maybe create inventory accruals, review the cost of goods sold, and interim accounts for assets also. So, well, the overall idea is that we could have these updated numbers for our inventory before we just actually close the specific periods. Actually, month by month, we actually do that kind of activities. And then we have the reconciliation of the subledgers. What could be the, in this case, customers' balances and vendors. So we need to get an idea of, we need to print reports for our trial balances for the AP and AR accounts that we have opened by customer and by vendor respectively. And in this case, it would be preferable also to have a print report for aged AP and AR. So here also there will be some important topics, some advices I'm going to give you. For instance, what about if you work with foreign currency, for instance, here, right, and so on. Last but not least, for the first part of the checklist will be the fixed assets. So yes, we need to calculate the depreciation and post the depreciation to the GL as we normally do month by month. Okay. With that, we will be understanding that actually we are just closing all the modules. So this is now what we need to do until we just close all the year. And then for the step number 6, we will need to review the manufacturing module to complete all the production orders. And in case we have also work in progress values, we need to also review those and start closing as much as we can all our what we call the finished production orders. This is important because if you are working with the manufacturing module, you will be having in that specific module as of ledger also some values that are not actually posted yet into our chart of accounts or GL account. So it's preferable. Let's remember that for any order within an AV, unless you post a document, an invoice of any document, or the consumption in this case for the manufacturing process, then we will be able to check that in the financial side, right? With that, we will be closing the operational side, and let's go back and review now what we call cash management or bank account reconciliation. We need to reconcile each bank. Using the bank reconciliation module, compare the book values to the chart of accounts for each bank and the posting groups, specifically how, depending on how you design it, but preferably one account by one GL account. It's very important if you currently have, maybe this is the first time you're working with the NAV, you're thinking about, that will be interesting to understand a little bit about the ERP processes. For instance, we have, for all of these processes we are talking about, we have different webinars for manufacturing, purchase, sales. And if you want to learn a little bit more about for instance, bank reconciliation that we are talking about, that we are just about to close today, we are not going to do a complete exercise for all of this, you can review our webinars, or you can just contact us to send you the material that we have for different topics like this. And then, well, for the bank account reconciliation, then we need to post all the transactions by bank. And as a step number 8 for the multi-currency, we need to enter the currency conversion rates, of course. They are very important, that will be used for gain-loss valuation, at the end of the fiscal year. So, well, we have one process that I'm going to show you today to run the gain-loss conversion routines, one currency at a time, of course, for customers, vendors, and bank accounts. So everywhere in the cash management process, we need to start reviewing the exchange rates for all the currencies that we have. Then I'm going to explain you a process almost at the end of this presentation that will be the local posting to year that will be closed in this step number 9. we need to change the posting dates in the GL setup. We need to check user posting setups, only set values for users that are exceptions. Now, what is the whole purpose of this step? We would like to limit users to post, of course, any sort of transaction to the periods that currently we are about to close. So the whole idea is that we can have some control on that. And at last but not least, we have the exercise of the year-end close. So actually, the specific step of having the closing of a year is very simple. It doesn't take more than 15 minutes. But all of these steps are actually the best practices to actually fully complete a financial process. Let's remember that we don't necessarily need to close within NAV your periods, but nevertheless, if you want to move at least from every fiscal year to another one that we are going to open, we need to actually start from zero balances, of course, and our P&L needs to start from scratch. So from January, we will need to start posting and recreating our GL balances. So, well, in order to create financial statements and budgets for next year, for the new upcoming fiscal year, we need to follow these steps and also think about following your organization business rules, of course. So run the year run the year balance sheet to review it, the income statement, statements of operations, try a balance report and verify balances, etc. So one step that is not included here as a whole is, of course, I'm going to show you some important tools for your reporting that will be actually giving you some access to the information that you actually need. So also run statement of cash flows, etc. So I'm pretty sure that you need to understand that you will have a lot of reports when it comes to review your year-end close. I'm going to show you some of them. And if you have some specific reports for your organization, just please call us. We have very powerful BI reports, reporting tools. So it would be really good to have some information that you need whenever you want to have questions about this process and what can we do for you. So, well, overall, this is a checklist. This is the checklist for the NAB process, and we are going to show you now how to do it step by step. We're going to review some advices, and at last but not least, showing you some reports that we have currently in NAB. Now, for us, we need to start setting up before closing. Actually, we need to start with some setups here. I'm opening NAB right now, where we actually gonna go to departments directly. This is the financial management and administration session for the people that will be actually closing. Today I'm the administrator, but I need to dedicate some specific permissions for the people that will be involved in this process. This is the first step overall. We have the possibility to restrict the dates from where we are going to register some transactions. At the moment, I would like to open and to allow the people that will be working here with the closing parameters and the adjustments. Maybe I'm actually indicating in the system that I will be able to post in the next year actually, and also I could review my account periods. And with that, I would say that overall we need to start creating all the years that we are going to work with the number of periods. And the whole idea here is that we need a starting date. In this case, will be 2018. A number of periods will be 12 and or 13 if you would like to have a month for adjustments. And you just can see that we have the new fiscal year just and some previous years that we have here in the system, and they are currently closed and date locked. We are about to explain what this closed and date locked means. These are very important checkboxes, but the whole idea is that also Apart from our periods, we have the, like we said, the inventory subledger to be closed. So here we have the action that can help us to close all the subledger for the inventory. But first of all, we need to explain some activities we need to do before actually closing. I'm just showing you this because these are the options that we are gonna use at the end when we actually want to close. But like we have just reviewed the checklist, we need to make some previous steps so we can actually have this process completed without issues with adjustments. With the figures, we need to review everything here, okay, for your closing, and module by module we are about to do that. Coming back to the first setups we need to have here, I'm going to create. This is something that will be basic, so you don't need to review these steps with a consultant. You can have an overview of what we do here, and the whole idea for you is to make this as a basic user, or if you are learning NAV, and also if you're trying to check how to go in depth into this process. We need a specific user. In this case, I'm going to create a local user who will be having access to posting different periods, so he can make adjustments maybe in the past, in the previous year periods. So I can have maybe the possibility to adjust on December of this year and January of the following year, or maybe the entire 2017 year, so he can make adjustments on any month. So it's I'm talking about best practices here, so you can have an overview. The whole idea is that the best practice is to have only one user who will be actually able to do this kind of postings in different periods. If you can see, I am able to post in 2017 and 18 and so on. So this is not common for all the users. Okay, they just can post in the current period. But at the moment, this is some of the setups that we need to do. And our advice as a best practice is just give this right to only one user who will be responsible for the closing activities. Okay, with that, we can move on and check some of the activities that we need to do here before actually going to the actual steps. Within NAV, we need to process the previous AP and AR transactions, review the AP and AR reports to check your overdue invoices and reconcile to GL. Okay. Now, one of the biggest concerns around accounts payable that we always have at month end is whether expenses have been posted to the correct period per the organization's policies on the expense recognition cutoff. And given that by default Dynamics NAV uses the current date as a working date, you will need to be aware of this if your policy allows to post expenses to a previous month. Okay, so this is not best practice for all the users. Okay, so once again, that's why we are explaining this. And many organizations will give a window, or maybe of 2 or 3 business days after the end of the month to include expenses that belong in the previous month, actually. So particularly if a corporate card is used, which have statements that are released soon after the end of the month, okay? A typical month-end process for accounts payable in Dynamics NAV would involve separating invoices and expenses that belong in the previous month for data entry, changing your working date in NAV for the last date of the previous month. To do so, click on the date in the bottom here. You have a specific a row for your status and the dates. You just click in there and change immediately just the date until the last day of the previous month, and with that you can start posting transactions there. But for that to happen, you need the permissions that we have already talked about. All right, so click OK, just proceed to process accounts payable for the previous month as necessary. Okay, so these are just the basic setups that you need in order to start working now with what we need to review the overdue transactions. Okay. Now, for me, the responsible for closing. Okay. Um, Two reports existing NAV to help monitor and reconcile your subledger. And for you who need to review all different transactions that are still open throughout the year. First of all, the accounts payable receivable report, which allows you to see which payables are current, due or potentially reaching the delinquency, which is a technical concept. So we need to start working on those transactions at the moment that overall will be actually really delayed. Okay, reconcile AP and AR to GL report is a second report which allows you to see all the purchase receipts or sales deliveries that have yet to be invoiced. Okay, so the reconciliation is very important here because we might have a mismatch between the subledger and the AP and AR modules, so we need to actually start reviewing that. With that, we will be starting the actual procedures for the closing activities of the checklist that we show you now. Okay, so for us, the H reports AP and AR. We need to first understand that our H transactions that we need to start working with, we need to review the balances on customers, vendors, apply all your payments to specific invoices, clean all your reports for both modules, right? So the whole idea is that, first of all, we need to go to either payables or receivables. In this case, both modules work the same way, except that from one module we will be receiving or paying for vendors, and the other ones will be receiving payments from customers. So we have, in this case, a report for each accounts receivable, and I would like to see all the transactions that I will need to work for the accounts receivable module until the last date of the year. And I'm going to use this specific setup, which is the posting date. Okay, no overdue transactions here, just posting dates. Show me everything here. So the period length for 30 days. Okay, and I'm just about to show you the HU report that will be the first the step that you need to do to review all the transactions for your AR module. Now, what we see here is that each accounts receivable report is showing you some important information about what we need to, all the opening balances for our customers, right, in different currencies. This is an example. We have dozens of currencies here, and the balance of all of them, right? Previously, we, of course, could have transactions in many periods that are might be still open even, okay? Or no, it depends on the policy of the company. But the whole idea is that we have just in the H report some balances that need to be reviewed because we would like to start processing these transactions, these balances, start maybe paying some invoices and so on. In the other module for accounts payable will be just the same. We need to review the H accounts payable. We need to review that for the last day of the year. And not only include the due dates parameters for transactions, but the posting date to review as much as transactions as we can to have the overview of the entire year, right? So with the accounts payable report, for each accounts, we, as the same as the receivables, we have our vendors, specific currency codes for all the vendors and the balances for the year with the breakdown of the different periods that we could have balances at the moment. The whole idea is that specifically, necessarily, we would need to understand that we need to clean period by period. So the best practice will be to not to have any aged figure in previous or periods, not for that maybe 6 months, okay, at most. But this depends of your credit limits that you have with your vendors and with what you have given to your customers. right? So the whole idea is that we can review all these invoices and yet to be paid, and that's why we generate first of all the age reports for AP and AR in first place. And this is the first step to do all of this. Okay, so review your balances on customer vendors. This is the report. Apply all your payments to specific invoices that you want to do. You want to process. Maybe you have priorities for your vendors and customers. Maybe you start with overdue or big amounts, or etc. Right? So clean all your reports for both modules. Review them. Generate them many times as many times as you need them, until you see the figures that you want as an overall balance. All right, because we understand that there's a lot of work here in this part, but the whole idea is that you with your aging reports will be finalizing all this process. Now let me explain you a little bit about the end of the month AP and AR report. I have shown you where I use it and some example of how to do it, but I need you to understand some important fields here. And H as of field that I have just selected as the last date of the year. The point in time to run the report is the first field, right? And then the aging method, based on due date, transaction date, or document date. We need to specify the posting date at the moment in this field. So we don't only include the due date transactions or balances in this here for our customers. Then the length of aging periods will be the interval between the three aging periods that we actually see that we can include here. So you have seen, I can only see three specific periods in this report. So I would like to see more. Okay, just select how many days you would like to see: 30 days, 30, 60, 90, etc. Okay. Then show if set a length of period to use for overdue balances, right? Print details, transactions, toggle between detailed, show all transactions overdue or summarize, show only totals, and vendor tab, set filters to see specific vendors if you want, as well as customers. So that will be in the filter section, right? This is part of the you can how you use this report and how it's functional for you at the moment. Then the whole idea of getting the report and start working with it is that at the end we need to reconcile these modules. This is important. A report shows anything that has been received or shipped through POS and sales order, however, have not been invoiced. These items will consequently not exist in your general ledger, right? That's why we use the reconciliation. Since the invoice amounts are what we hit the GL actually. So you can use the amounts displayed here to set up an accrual, for example, if necessary. Okay, there are some examples to do this. And with this report, you now have information to use for either investigating, following up on, or reversing by credit memo any past due posted tables, maybe. So use the totals of this report by vendor for the reconciliation poster group, domestic, I don't know, foreigners, etc., to reconcile the subledger accounts payable balance to the corresponding payables control account in the GL. Okay. Now let's see the reconciliation. Okay. What this does is have the ability for you to see that is what is outstanding in your vendor or customer, and what is impacted in your GL but not yet your subledger accounts, right? So this is a report that we generate. So AP and AR needs maybe some adjustments. We need to run this reconciliation for the last day of the year. And let's just give a preview of the report so we can understand the second step we need to start checking here. Like I said, what is impacting at the moment my GL account. So we have some all the accounts that currently we use to post for our customer and vendors and different processes for AP and AR. Here all the posting groups. Some of them might be local, domestic, or from European Union or foreign. And the whole idea is to review what has actually impacted our GL accounts and from the AR and AP modules. And we understand that we should not have differences here, all right? So this is our report that we have at the moment. And It doesn't matter if you have differences. We need to specify that that will be normal actually. And the whole idea is that we have transactions that will come in directly into the AR module. Some of them will be just through journals, maybe, right? So, well, this reconciliation report helps us to understand the differences, but nevertheless, we would need to review account by account and transaction by transaction according to this report and the difference we see here to follow up until we review which are how the differences are actually summarized in each GL account. So maybe AP or AR modules need some adjustments, right? So, well, for me, the whole idea as a responsible is that sometimes I need to make, like, if we have some differences from our reconciliation, I would like to not only generate the report, but also to create directly the adjustments. So we need, after I have generated the report, I need actually to understand how to process the adjustments directly to get rid of those differences. Okay, in order to do that, we have the receivables and payables modules, purchase journals, and sales journals. Okay, before you can close, it's very important to do it. Okay, review adjusting entries for payables or receivables. Okay, in this case, for payables in the purchase journal, just select the vendor. Okay, which will be directly impacting the AP module against the chart of accounts with the specific a GL account that you have selected for a specific AP or AR operation. So, well, before you can close it, you need to do this also for receivables as well as for payables. And we have for that the sales journal. In the sales journal, it will be important to select then the customer for which you need to create the adjustment. And as well as we have a bill to customer at the moment, we are going to create some differences, some adjustments to cover the differences that we review in our reconciliation report. Okay, so we need to make sure that anything we need to move to our ledger accounts is done through these specific journals. Okay, we use the purchase and sales journals once again to impact the sub-ledger accounts for vendors and customers only. Okay, so directly we do it here. So you can then start reconciling and getting the report all over and over again until you get after you have processed, remember, all your sales and purchase orders, and then you just come here to review whatever the sub-ledger differences could be and have the possibility just to adjust the modules. So, well, with that, before you can close, review your adjusting entries for payables. Remember that, okay? It's very important for any responsible of the operation that this kind of adjustments know where to do them and when to do them. So review this presentation so you can start working with it properly and without missing any step that will be important. All right. Here. Now we need to reconcile our overall report to have an AP and an AR against our GL. Okay, so to summarize everything, we have one specific report that will be really important for you. This is the reconcile LP to GL, as well as in accounts receivable. We have a report. This is a very open report. You can review this by department, by project, by document number, by vendor even. So this is actually a very open report. Okay, the whole idea is that you, in a very detailed way, review that all your modules actually match, and you don't have unnecessary differences that nevertheless wouldn't allow you to close later the specific period you want to review. Okay, so the whole idea is that once we have done our adjustments and our applications back to our subledger account in our payables and receivables, we will then want to do a reconciliation once again for AP and AR to general ledger. Okay, many ways to reconcile, of course. I have shown you and run the reports in NAV. I'm just showing you the best practices to run some reports in NAV packages. And the whole idea is that once we have run this reconciliation report, we need to make the adjustments, necessary adjustments for all of these operations, right? To avoid differences, first of all, with our ledger and sub-ledgers, and second, maybe that will be helping us also to process payments, invoice, review which purchase and sales orders were already received but yet not invoiced, and so on. So that kind of operations and adjustments overall need to be done prior to start working with the actual closing, right? Then, to follow our agenda for today in our checklist, this covers the first 3 to 4 activities, and then we will need to start talking about our inventory. In our inventory, there are many steps actually involved to close this module. This wouldn't be necessary for companies that actually are only working with with finance, okay? But if you currently have manufacturing, if you currently have a multi-site environment with your warehouses and so on, this is strictly mandatory, right? Need to review only this process for closing our inventory. Then, first of all, we need to run and to understand what the inventory reconciliation. Like with the sub-ledgers of AP and AR, we need to have all the updated information from the inventory from every module, production, warehousing, etc., and have the last figures of these operations into our financial reports. Now, also we need to run the inventory reconciliation as end of a fiscal year date. And another process that we call the inventory revaluation, which will be always very important for all the closing activities for every month, and is not an exception for the last close of the year. So depending on your industry, of course, or to correct errors, you may be able to value inventory as part of the year-end process. Well, now is the time, okay? So we have some routines here. I'm going to explain you all of this. We need to run the adjust cost routine. We need to update your costs because you know that while you are purchasing, you have a lot of movements of your cost of the raw materials that you purchase. Sometimes if you have different costing methods all the time, so we need to update throughout the year and cascade all the different costs, the historical data. If you maybe have the average cost of an item, you would like to have the last updated average. And you need to run this adjust cost routine, and then just have another step for run the post cost to GL routine, and that will be giving us the last figures to our GL chart against, and to have the evaluation of the inventory also. Then we need to run the inventory reconcile. We need to review what has been received, not invoiced yet, or shipped, not invoiced yet, etc. So the whole idea is to start tying all the documents to create inventory accruals, then tie our ship, not invoice posted to GL to create cost of goods sold, right? And tie our net inventory. If we have interim posted, we need some interim accounts to your inventory, so we can then later move those figures to the following month, all right? So we need to tie the inventory posted to GL to the inventory asset account as well, okay? So this is just part of the routines that we are going to cover and explain them, of course. So first of all, as we know, in any closing, yes, we know that we must run the inventory evaluation. Once inventory is cycling again, you know, we know this is critical to run an inventory evaluation report. We want to make sure that we run it on the last day of the period we are about to close. So displays inventory evaluation for selected items in your inventory if you want it, okay? Let me show you the report now. Here, For us, the printer report always shows actual invoice amounts, and that is the cost of entries. We just, let me open the report, inventory evaluation, okay. That have been posted as an invoice, okay. The report will also print expected cost of entries. I'm just selecting the last day. That have posted as received or shipped. And if you select the include expected cost field on the option fast tab, let me show you. This will give you another. We have another approach for the inventory evaluation that could be immediately after you actually start posting any transaction. And if you if you want to separate the process of the calculation of the cost, okay, we would then need to review this further. After we have just generated the inventory valuation report, we can see that the printer report groups entries by inventory of posting groups. For each inventory posting group, the report shows a group of total for invoiced costs. If you have placed a check mark in the include expected cost field, the document will also show a group of total of invoiced expected cost. And then if you have more information about what we are talking about with the expected cost, etc., please, we can give you some training on most costing related topics, right? So before you can run this report, you should run, like we said, a routine to update your costs overall. And we have some bad jobs, and we could generate training for that. So if you do this, the values shown in the inventory evaluation report will be up to date. Okay, in the NAV, we have two methodologies for costing overall. One will be just in real time. Whenever you post a transactions, immediately the calculations will be done behind the scenes, so you can have the actual cost with every transaction that you post, which of course takes some more resources from the system and the server specifically, and some time to post actually any transactions. Later we could actually, and the second option, excuse me, it will be actually to have the posting of the or the evaluation of our inventory to leave it for night at night. So throughout the day we can just continue posting sales, purchase, adjustments, etc. Anything related to our inventory, and then at night just adjusting the cost. Okay, that are actually two separated processes. One will be the operational to receive in the warehouse to update the quantities, etc., and the other one will be the actual evaluation of all the transactions that we post. So then, like I said, these reports first review the values that might be quite different actually from what you expected, and that's why we are including the increasing decreases and what has been just posted to GL. Okay, this is very important here, just to start reviewing item by item if the value is okay, where you can see the quantities received, the decreases may be sold or adjustments that you have created here. And through the valuation report, you may, of course, understand that is related to the value as the cost of the specific items are just being calculated behind the scenes, so you can have the information here in this specific report for all your items, and start reviewing whether the calculations are fine. According to maybe you might have a specific process for cycle counting, so you might have the differences of your physical inventory. Then you need to adjust first, okay, make the physical adjustment and post it, of course, and then just come again and run the inventory evaluation report. And now it is very important also that we have some routines, because let me explain here. This report is giving you the evaluation of all your inventory, of course, with the different entries for different updated costs. Okay, but what about if we run the evaluation report? We will then, like the previous example, we have a physical inventory count. Okay, what about if we have more adjustments? What about if we need to post more sales or purchase orders that will be affecting our costs, okay? And somehow we realized that we forgot to post a purchase order that was maybe in November, all right, that we just forgot to post it, that it's just impossible to post it in December because of Apple policy of the purchasing policies with this specific vendor. So we have limits sometimes, okay? We need to post in the past. We are still moving the cost of our inventory, so our evaluation is all the time moving. So if that kind of things happen, we need to come into NAV and open the adjust cost item entries batch job, okay? As we know, in any closing, we must run the inventory evaluation. Once inventory is cycling again and that kind of stuff, we need to review specifically this routine so we can update all the cost that is actually being recalculated again. Let's say that for the previous months, for any item, we have an average cost of $10 maybe. For all the months, for any specific reason, the cost actually never changed. But that in every month we have an average cost price of an item of $10 maybe. What happens if at the end the purchase price of the item moves to in December? This will be a seasonable product, changes to 15 or even twice, you know, at $20. Then of course this will be affecting the average cost of the entire year, even though it is just one transaction. But it depends of the volume of the purchases and the cost price variation. Everything in conjunction will be actually affecting the average cost of the periods that actually will be going in the future or after the transaction that is being posted. Maybe we post in November, but if we post something in November, this will be affecting in cascade the cost of December. So in order to reflect that, after we need to post late transactions, we need to come here and start working with the adjust item entries batch job. Okay, we just need to click OK, and everything within NAV behind the scene will be calculated. So it is very easy to run it. And once again, we have one very important a setup here. So the post inventory cost to GL here. This specific process, after you have created the adjustments, etc., after you have decided how will be your costing a methodology, then you need to actually, after you have updated everything, just come into NAV and use this specific batch. Is a post inventory cost to GL. So well, this records the quantity and value changes to the inventory in the island ledger entries, right? And the value entries when you post the inventory transactions, such as, like we said, sales, shipments, purchase receipts, etc. So unless you have selected the automatic cost posting, which will be transaction by transaction posting everything and updating the cost, the inventory costs are not recorded dynamically in the general ledger, and cost of goods sold is not calculated in connection with a sale, for instance. Therefore, you must post the general ledger manually by running the post inventory cost to GL process, which is here, the batch job to update the general ledger and potentially print a report of the value entries that are posted, all right? The batch job uses values entries as a basis to calculate the value. It uses the differences between the cost amount actual and the cost posted to GL, okay? So fill in the values entries if you have selected the expected cost posting to GL checkbox, okay? And when the batch job also posts the differences between the cost amount expected field and the expected cost posted, then we'll be needing all the time interim accounts in our general ledger, okay? So it is very important to have this kind of accounts for the closing purposes all the time, as well as the retained earnings account. This is just a normal accounting rules that we need to, these specific accounts for all the closing processes that we need to have for every period and specifically the fiscal year, right? So we can calculate at last but not least also the retained earnings. When we go with other modules and review the expenses and income for the entire year and move all the balances to the 2000, in this case 2018 new year, right? This is the setup that you need to understand if you want to work within NAV. If you are actually working with the automatic cost posting, that will be posting automatically your transactions and updating the cost transaction by transaction. Or if you leave it blank, you now understand that NAV is just at the moment just posting into the inventory modules, but not yet affecting the valuation. All right. So check it and understand the processes here. If you have questions about what this means, we can help you. So don't worry about it. Inventory closing is actually very, very easy to follow. Don't worry about it. And well, for us, the inventory posting, like we have just explained, we'll be updating all the soft ledger to the actual chart of accounts. And then we have the inventory period. If we go back to the financial side, of course, we can just come and close the period after we have just run all the processes before, and then we just select the specific last day of the year, all right, for 12th of December in this case, and just come and close the period immediately. With that, this function will be closing the inventory. Okay, let's remember that this needs to be reviewed, okay, to process all the back order, to make all the adjustments you need, and review if the inventory valuation is fine, just as a conclusion of what we do here before actually just coming here and closing it directly. Actually, NAB will be telling you that, and maybe you still have maybe open transactions, right? But nevertheless, the whole idea is to give you the best practices so you don't commit any mistake, because the whole idea is that once you actually have closed your periods, I'm going to show you later that in some cases we can still adjust after we have just closed some periods, but in other cases it's an absolute no, and that's something that we want to avoid now. All right, so I'm just showing you once again how to close it. We could just come in here and close the period of the fiscal year until 31st of December of 2017 in this case. Okay, so well, with that, that will be the inventory processes. And let's say that apart from that, apart from just posting the inventory, I still while I'm actually just closing the period, I still have the warehouse working with purchase and sales orders. All right. So any sales orders or purchase order that need to be invoiced in parallel with the inventory physical counts as well, everything will be impacting our inventory. So we want to make sure that our team management is opening and working with any document that is released. Okay, that's why I'm showing you now the sales order with the status that need to be received, maybe and invoiced. Okay, or delivered so to our customers, so we can just move forward in this case. Okay. Now, let's take a look at our. So we need to take a look at orders we have to do. So we open the list of orders, either purchase and sales orders, and review the released orders. Okay, then we can proceed to process to complete these back orders overall. Okay, we need to accrue and make a periodic reversing entry, of course. Okay, as a financial accountant, you know that this is standard reversing entries, so there's no problem with that. So we can conclude in the inventory side of the closing process. Okay, so the whole idea with these last purchase sales transactions is that you need to make a periodic reversing entry for the following year, 2018. Okay. with that, that's actually some of the best practices for the inventory and closing. And then at last, if you're going to continue work, just set up just reversing entries for your last transactions, that so you can just move on into the following year. Now, let's talk about cash management, of course. The cash management module to review the bank reconciliation, okay? Um, just at regular intervals, okay? This is NAV at the moment, showing you the normal bank reconciliation for cash management. You must reconcile your bank accounts, of course, in Microsoft Dynamics NAV by matching bank ledger entries resulting from the posted payments with the related transactions or your electronic bank site, and then post the balance to your bank accounts. For this purpose, the bank account reconciliation, in this case, the window we are showing you now, we need just to select all the transactions that we have and start to compare it and reconcile with your statements of from your bank. Okay, you can use either. This is important to mention. Just you can use either an automatic or manual matching function to match lines in the two panes. Or use an importing tool that we have to import bank statements. Okay, the following table in this case the information that you see. I'm not going to show you today the bank reconciliation process, but we have we have some webinars that were completely dedicated to this process that you are looking at right now, where we can just review the statement ending balances from the bank compared to what you have within NAV and start reviewing transaction by transaction, or making NAV helping you with the matching of the transactions to actually reconcile everything and review that you have no differences. So the tasks listed overall is that you need to create a bank reconciliation of all your banks, okay? A bank by bank and a posting group by posting group. Preferably we have one GL account per bank. So with that, we will be working with the bank reconciliation and matching by posting all our reconciliation statements. Then we will be finishing this process. Okay. So if you have more doubts about it, just please contact us so we can give you some other feedback about your bank reconciliation when you need it for your closing activities. Okay. Now. We have just reviewed all the adjustments we need to do module by module until bank reconciliation, inventory, sales, purchase, etc. And at the end, what do we want actually with the closing? We need to understand our figures, our balance sheet, our P&L, and there's this functionality for account schedules that is going to help us to do that, because we have an internal reporting tool that will be only for financial purposes at the moment. And the whole idea is that as account schedules, let me show you, within Microsoft NAV, these are used to allow for the analysis of your chart of accounts by dimension. A dimension is maybe the department, the people, the structure of your company, okay? And it's a concept where we just can group of transactions. For instance, this is a budget analysis, okay? Again, the actual figures maybe. So the whole idea is that I'm just running an acid test analysis. So once I have actually processed all the transactions, I could just come and repeat this same report. Maybe it could be my P&L, my balance sheet. I would like to filter by department also. I would like to review by quarter, by year, and all the transactions are fine, all right? So this is what account schedules actually work for. A user comes here and uses the concepts and GL accounts that he can just manually create the specific reports and specify the same financial information that we currently have in our chart of accounts, but we can just like break it down into another perspective. In this case, just a budget analysis, where we can just actually recreate budgets and make comparisons with our financial information to different variables. Okay, so they can be actually account schedules can mean anything relevant for different departments, areas, or operations. We can create balances with balance sheets, profit and loss reports for our own analysis. so we can review the subledger also and the activities related to our operation and all that we have just reviewed today for the closing purposes. All right. So never forget that the account schedules are also very, very important. It's not only about having your chart of accounts, but also to make actual analysis to your information. Okay, and also if we want more complex figures, maybe for let's say production or manufacturing module, where we just need to understand our costing in a very detailed way, we have another tools that are not as a part of NAV, but actually are integrated, such as Power BI, that is going to be really useful when you need to create a more complex reports. Okay, when you need to maybe create KPIs specifically for your area, departments, the people that you work with, or just specifying some different calculations. Okay, so account schedules is one way to see the financial information, and you select the GL accounts that you need by segments, by dimensions, and so on. All right. So well, this is account schedules a functionality, and then in order to continue and at last, after all these processes we have just reviewed, we can just now start closing NAV. Okay. At the moment, the whole idea of closing the fiscal year is that we need to transfer the year's result to an account in the balance sheet and closes. We need to close the income statement accounts, of course. So you do this by creating lines in a journal, which you then can post. Okay. At last but not least, we have the batch job processor. All general accounts at the income statement type and creates entries that cancel out their respective balances. Okay. That is, each entry is the sum of all the general ledger entries on the account in the fiscal year. These new entries are placed in a journal in which you must specify a balancing account and retained earnings account in the balance sheet before you post it. Okay. Then, when you post the journal, an entry will be posted to each income statement account so that the balance becomes zero, and at the same time, the year's result is transferred to the balance sheet. Okay. You then post the journal yourself, and the batch shop does not post the entries automatically, except with an additional reporting currency, maybe it's used. Okay, and when an additional currency also is being used, the batch shop posts entries directly to the general ledger. Okay, so take care with that. Now, to close the fiscal year, the date on the lines to close it, the procedure to after we have just done all the procedures, okay, that we have just completed. After we have just moved our journals and moved our initial balances, then we just come into the function closing fiscal year. Okay, so with that, we have just two options here. We can just click on yes to close our periods. Okay, but let's remember something. We have one specific column that is date locked. Okay, if this is selected at the moment, this means that there is no turning back. Okay, you won't be able to post never into these specific periods. Just let's see, I'm just showing you that it's 2006. So we are not going to be able to post no matter what. If you have administrator users or the management people or any kind of role, nobody will be able to post any other transactions into these specific periods. Okay, so they are now date locked also, and not just only closed. When I just close it, nevertheless, I still can maybe create some adjustments if needed, etc. But that will be just to prevent unintentionally, the posting for some transactions that we don't want to see. Okay, we can use the closing parameter, but whenever we just decide to block the system in specific periods as absolute no, then we just need to use the date locked checkbox. Okay, with that, I would say that we don't need to do anything else. at the moment. If you need some help with initial balances, that will be once again another very big activity. I'm showing you the closing year functionality. But if you need to move from one year to another your initial balances, maybe you want to review and please call us. We are gonna help you with anything that you get stuck in the closing processes. If you have seen something here that maybe was not clear before for you, we can help you to fully understand all the procedure in depth. Okay. And for now will be all. Hopefully you have I have made this very easy for you to understand it and to follow to have a really good overview with best practices about what you need to do. And now if you have any other doubt, also please feel free to contact me and Noé Wellman at optimist.guru. And here we'll be helping you with training, with any procedure that you require. If you need to process adjustments, opening balances for the following year, etc., just please call us. We'll be here very eager to help you. And thank you very much. This is a session of the closing fiscal year. Thank you very much.